Alright guys, welcome to the final video of phase 4, which is going to cover redistribution. And to avoid having to make another video, I'm just going to wrap everything Wyckoff related. I'm going to wrap it up after this part just to kind of make it a lot more compressed. Um, but anyways, right, redistribution, this is probably, it might be just a me thing, but I personally don't see many redistributions, as many of you might not either. Just like many of you might not see reaccumulations, but you see redistributions. That's just kind of like a psychological part with your mind on what you see and kind of what you want to see, and you neglect certain things. But I don't really know too much on that, but that's kind of how it works, which is extremely weird in my opinion. But anyways, right, redistribution. This is the least. I don't see this schematic almost rarely ever, um, and maybe that's because of the pairs that I trade and the directional bias that I have with them. So it just wouldn't make sense for me to see a redistribution. So, like I said, it's very off, but I don't really see these too often, and not to mention there isn't too much data on them. Like actually finding a schematic for redistribution that's actually made by Richard Wyckoff is extremely hard to find. You'll see other ones that other people make, but for the most part, I don't really see many that are legit. So that's also why I say it's more significant to understand that, to understand what's happening inside of a trading range, not trying to find every single abbreviation, right? Because you want to know what's happening inside the trading range to determine where it's going to go. Okay, so redistribution, right? The stock definition, essentially the re-release of an asset's shares slash supply over X period of time, right? We don't include at desired price because they can happen multiple times, and it doesn't really, that's not really the biggest aspect there, right? It's only a continuation, right? In terms of my definition, it's just the re-release of supply, the continuation of downside movement. Um, so yeah, let's go ahead and get to the examples. So example number 1, right? Very very weird schematic. I like, just even me looking at this now after I made it, it's very weird, very different. Just to put it like that. um right, so pre-supply, right? You see your pre-supply, so you see your selling climax, right? You don't see that climactic action, right? But we do see it a bit afterwards, after the automatic rally, but this isn't really too important to me, right? It's just more so showing me it's taking a lot of effort to continue lower. So in order for us to go lower, we need an incentive, we need a catalyst, right? So we have high supply here, but low movement, right? This is signaling potentially that we're going to start seeing diminishment and a reversal, right? So after setting climax or automatic rally, right, you had our secondary test, right? We then came up as an upthrust, but you can't really tell this in real time, right? You can't tell this is an upthrust until the upthrust takes out the essential structure here. Not because it's an upthrust, but it's just as in terms of a structure perspective. In order for me to consider this an upthrust, a liquidity grab, to then continue lower, it has to take out levels of structure, right? So after the upthrust, we see secondary test 2 here, right? So we inevitably come back into the upthrust to mitigate the 50%, and this is now signaling bearish order flow, right, as an LPSY to then another LPSY to then another LPSY, which leads to the overall sign of weakness, right? Keep in mind our bullish volume is diminishing, right? And you could see the bearish volume start to accumulate just a bit here, right? I should have added that arrow, sorry about that. But anyways, yeah, as you can see, right, we let this show its hand before you can take a scenario. Always let it show its hand, right? Even though I may not always do it, I recommend you to do it. Why? Because you want to be as conservative as you can, because you want to learn how to win trades, right, before you start refining it and trying to get a lot more extreme with your executions per se. But yeah, anyways, right, the continuation, high, low, retracement, continuation, right? That's all redistribution is. Example number 2, Euro GBP, right? As you can see here, preliminary supply, setting climax. We do see that climactic action, right, in our phase A, which is what matters, right? Because that now signifies that we're seeing that bearish diminishment, right? Which means that in order for us to continue lower, we need an incentive, we need a catalyst, right? So we have our pre-supply, setting climax, our automatic rally, right? Our secondary test area here, just because this looks like 1 test, 2 test. as soon as we see that, we see our upthrust come take out liquidity, then come back lower, signaling a liquidity grab, right? So after this liquidity grab, because this is a new low created a new high, you naturally expect this low to create a new high. But what happens? This low creates an unwillingness and then breaks structure, which is why I call it optimism, because it's giving me a hand to play off of, right? So even if we don't react immediately from the continuation here, we still know that we have our leg intact from here to here. So we inevitably come back high, low, retracement, came back to mitigate this area here, and that ends up with your LPSY, which leads to our SOW because we take out our optimism, LPSY, and the full move down, right? But also keep in mind that while this optimism is occurring and we're seeing this upside move, we're seeing that diminishment in bullish volume, right? And that's what matters to me, right? Because we now have it show a tan, we now have the volume supporting it, we now can probably find a POI inside of this area, even though we took out this area, right? So just keep in mind, right? Volume, optimism, right? Mitigation, continuation, because we're still bearish and we can only assume continuation, okay? Because like I said, we don't have the data to assume otherwise. Okay, so example number 3, final example, right? As you can see, preliminary supply setting climax. Once again, we see that kind of climactic action, but then we also see a ton of demand come into play. So it's very, very weird per se, even though our entire bearish diminishment is there, right? So you see that, right? You see our automatic rally. We see our secondary test area here because we see 1 test, 2 tests, 3 tests, right? And that leads to a quote unquote liquidity grab. Sorry about that. So this liquidity grab, right, takes out our automatic rally, and I see that as an upthrust. So the only way for me to see a UTAT is if it takes out the upthrust, right? Unless, if that doesn't happen, then you're obviously seeing, the LPSY. But as you can see, the candle that took out liquidity, right, was then later mitigated, right, which then led to a break of structure, right? So keep in mind, while we are in this first mitigation, we can't assume that because we just created a new low to high and potential low to high, right? So as we're seeing essentially this LPSY take out structure here, we're also seeing, right, our bullish volume start to go up, which essentially is not really the biggest sign for, continuing lower. But we also got to keep in mind that we have an SOW and that we have this, even though this increase in volume, right, we're not seeing price go higher, take out any types of highs, right? So we have 1, 2, 3 mitigations, right? Or up liquidity grab 1, 2 mitigations, which signifies strong bearish order flow to the downside because this LPSY took out structure here, right? Gave us our SOW, and this doesn't really make sense, right? So naturally, if it doesn't make sense to go up, then it's going to come down, right? A bit more of a confusing example, but just feel free to review this. And it'll make a lot more sense if you understand that we're still bearish. And keep in mind, we can only assume bearishness unless we see the entire leg be taken out, right? Because even if we try to take a long position, you have to acknowledge the fact that you're essentially trying to pick a low. Okay, so for the most part, that's going to pretty much wrap up the redistribution aspect. But I do want to pretty much wrap up everything Wyckoff wise. So after this video, I know in the outline I had something like schematics in real time or something like that. But I feel like I have answered, how to differentiate and how to see them in real time. So even if you ask me again, let's say you ask me, how do you trade schematics in real time? I say you don't, because you can never assume that this is going to happen, right? There's tons of scenarios where you wait for a spring, but you don't get a spring, right? There's times where you try to play as an LPS, but it's actually a spring happening, right? So it's always important to acknowledge what's happening inside of the trading range. That's what's going to differentiate everything, right? It's going to be the essentially the difference maker, right? Because you're now understanding how to read a trading range. You're not just trying to pick a lower or try to assume continuation or try to assume reversal. You actually know what you're doing, and that is essentially a confidence builder. Okay, so in terms of Wyckoff, right, I do see a lot of misconceptions, misconceptions, right? Like, I don't want you to differentiate a flag from a range, right? So a flag is usually very unstructured, has a ton of mitigations, and it has weak order flow. And that's kind of what I believe it's the schematic 4 from those documents that have schematic 3 and 4 for accumulation and distribution. Like you see how you have those pretty much those flag shaped patterns. I don't believe in those. I think that those are very subjective and they don't really make much sense to me. Right? So always try to stick with ranges that are horizontal, not diagonal, because if they're diagonal, more than likely they can be flags unless they're structured and they can actually be redistributions, reaccumulations. Okay? So after that, assuming every 3 drive is a schematic, that's also a big misconception. Just because you see 3 drives does not mean you have a setting climax, secondary test, spring, right? That's 100% false because you're trying to compare the law of 3 to the laws of Wyckoff, and those are two very, very different things, right? And like I said, they can work, but they're subjective. They're very inconsistent in my eyes, right? But by all means, you should definitely look into it, back test it, and if it works for you, by all means, use it. Neglecting volume. Okay, neglecting volume, right? Anybody who trades Wyckoff and doesn't use volume does not trade Wyckoff. That is flat. That is honestly, I think that's a universal rule. If not, it should be. Why? Because volume is such a key aspect in trading, and even though you'll get the argument that the data provided on TradingView isn't accurate, and I'm like, okay, I don't really care for the numbers to be accurate. I care for the proportions, right? I care for if there's high volume, low volume. I don't care if it's 900,000 lots or in terms of bullishness, and I don't care about that stuff, right? I care more so to see the proportions change, because if the proportions change and they match certain aspects of structure and order flow, then you can assume the directional bias, right, with high confirmation, high probability. That's what matters. Okay, so therefore, as a Wyckoffian, right, you have to focus on the logic, you have to focus on the principles, not on the just the simple components like an automatic rally, like just even knowing what volume is. It's all put together. Yeah, so you have to put the entire logic together, right? The study of trading ranges, right, that causes a continuation or a reversal, and you have to break it down with structure, order flow, momentum, volume. Okay, so right, you have to learn the tendencies. You have to know how to read showing its hand, right? And it's going to take practice. It's going to take time, right? So just don't try to rush it. Just take your time. At the end of the day, you're already paid for this, right? You don't owe me a dime. You don't owe anybody a dime anymore. So take your time, take advantage. Right? So just remember, right? Try to, how do I say this? Try to combine everything I've said over the past 4 to 5 videos, right? And try to apply it into your logic, right? And I think it's going to make a lot of sense once you actually start learning to apply it and you actually start reading mitigations inside of trading ranges and not trying to assume a trading range as a schematic just based on picking lows and highs and, trying to read certain reactions without all the components being aligned, right? Not saying that every component has to be aligned, right? But the more the better, right? So just make sure you're reading your structure, you're assuming continuation until you have a reason not to. Okay, so that's going to wrap up phase 4, and I'll see you guys in phase 5.